Every investor has an entry process. Almost no investors have an exit process. At this gap between the entry discipline and exit discipline is where most of the investors quietly lose their gains. Today, I am going to share my experience and certain criteria that I follow to exit any stock. I will be sharing the concept and the reasoning for a few, and for some, I won't be sharing the entire indicators as they are proprietary to my own investing. So I hope you will understand the reasoning and the concept, and that alone will help you to exit a stock in a better manner. Let's go through all the five of them. The first trigger that I follow is extended prices. If after entering any stock, the price of that stock extends in a smaller time frame, then I make a partial exit in that, because I believe that extended moves deserve respect. So if for a stock, if it is extended from my buy price in a very short time, then I believe that those gains should be protected, as I partially exit. So if the stock gives a further up move, I have some quantity left with me, and if the stock price decreases from the exit, then at least I have gained gained at the price which I have exited. The next trigger which I follow is the stop loss hit trigger. This is mostly mechanical, as I have earlier also said that I believe that stop loss is an investor's best friend. So I always put a stop loss at the time of entry itself. I don't put the stop loss when the price is near that stop loss price. And most importantly, the mistake which investor do is they keep on lowering the stop losses. So that is the biggest mistake which one does, and I let the stop loss get hit, because if the stop loss hits for the stock that I've entered, it means my thesis have proved me wrong, and I can't be correct every time. So the stop loss hit trigger is mostly mechanical. I don't put a stop loss after my prices drop down to a certain level. It is put at the time of entry itself. Then the next trigger which I follow is if the price has closed below a moving average. This is a technical trigger which shows me that the momentum is fading. I want to share the exact moving average with you, as it is a proprietary framework for my own investing. Also, your time of holding a stock at the time of entry, if you have decided the time of holding, so that will also vary. So your moving average will vary according to your own setup. Also treat this moving average as a health indicator. If the price is above it, then you you need to invest in or be invested, and if the price drops below it, then you can exit it. The next trigger which I follow is if the target is hit, the target that I had set at the point of entry. This is the most satisfying figure. This is the most satisfying trigger. If your target is hit, you exit the stock. And how I calculate target, that I have my own framework for it. I can't openly share it as it is a proprietary one. So and you can view how the target calculation is done in many of the videos that you get on YouTube. The last trigger which I follow is opportunity cost. That is, if I am holding a position in certain stock and it is giving me profits, or it is not a bad hold, but if on screening my stock, on screening any other stock, if there is a better opportunity, there is a better technical setup, the fundamentals are good, and the target price is better, the returns are better in that stock, so I'll take that stock and exit this, because although I am in profits in this stock, but there is a better opportunity to gain some returns in any other stock, because I believe that your capital is finite, but your opportunity cost is real. So these are the 5 exit criteria that I have defined for myself, and clearly shared my honest framework with you. I have defined the concept and I have given you the reasoning for all the triggers that I follow. I hope this exit criteria you will fit into your own investing strategy, because everyone knows how to enter, but somehow or other the exit is not proper. So yeah, thank you.